Hello and welcome to Fidelity Connects, a Fidelity Investments Canada podcast connecting you to the world of investing and helping you stay ahead. Today on the program, Fidelity Equity Research Analyst Payton Liske joins host Pamela Ritchie for an in-depth discussion on the U.S. aerospace and transportation sectors. Payton dives into the challenges and opportunities facing the transportation sector, which has experienced significant volatility and earnings drawdowns since the pandemic. He also sheds light on the slow but steady recovery of the aerospace industry, where domestic air travel is rebounding, but also touches on the supply chain issues that hinder OEM production. Payton also talks about supply chain dynamics and how the stronger pricing powers within the less-than-truckload segment has benefited from market consolidation. Payton also discusses how advancements in digital brokerage are reshaping the logistics landscape, offering smaller trucking firms greater access to business opportunities. This podcast was recorded on August 16th, 2024.
Nice to see you. Welcome.
Thank you very much, Pamela. Very excited to be here.
Very glad to have you here. Let's ask a little bit about you. You're looking at the U.S. market. You're based here in Toronto, but you're zeroing in on these two areas. Just to give us a little bit of background of when you started and how you got here.
Sure, yeah. So I've been with Fidelity for going on 11 years now, and I've covered three different industries. I started in metals and mining, covering a broad range of mining companies. And then I rotated to healthcare, where I covered medical device and technology companies for 3 years. And then I've, for the last 3.5 years, been covering industrials, which have been a focus on transportation and aerospace companies.
Fantastic. Okay, so let's dig in now to aerospace and to transport. You would kind of think, just based on interest rate and the way you look at defensive sectors versus some of the other sectors, that they would be moving and be in a very similar cycle. But they're not really. Why is that?
Yeah, they both actually have very unique cycles, much like a lot of the sub-industries within industrials. I think it's very difficult to generalize within industrials. It can be quite challenging to do so because everything follows its own cycle. And within transportation, it's been very unique, I would say. The past 2 years, we've seen one of the largest earnings drawdowns that the industry's ever seen, going back to the global financial crisis. And a lot of that began from the pandemic-induced bull cycle that we saw from the second half of 2020 into the early parts of 2022. You saw a huge shift in consumption behavior towards goods as people were under lockdown and couldn't, spend on services, going out to restaurants and traveling. And that created a huge need for capacity. We saw this huge increase in capacity, which we've been dealing with in this oversupplied state for the better part of 18 to 24 months now.
And the supply chain story was just all we could talk about, wasn't it?
That's right.
Through some of those months and years.
Yeah, it led to very strong pricing power for a very short period of time in a low barrier to entry industry, which created a lot of demand for new capacity and flooded the market. And so we've been in this situation where these companies have been struggling for some time. But within it, there's a lot of opportunity still. There's some sub-industries within transportation that provide very strong returns on invested capital, very unique margin stories, and actually real pricing power. And maybe we can touch on some of those.
We really will, and trucking is the name of the game. And for part of that, I just want to go to aerospace briefly to just sort of discuss, because they had the opposite. They were the reopening trade, weren't they? They were sort of at a slightly different timing.
That's right. Also very influenced by the pandemic, probably the hardest hit sector of the entire industrials. We saw air travel basically fall to zero for some period of time. And it's been a very long, slow recovery. It's taken about 4 years to get back to the same levels of passenger travel that we've seen domestically in the US and Europe pre-pandemic. So we're now kind of there, we've recovered. But OEM production rates have really struggled to recover because of a lot of supply chain issues and some issues with some of the largest OEMs not being able to meet production capacity plans.
There's been lots and lots of delays and still the bottlenecks in some of those. So, okay, we'll go back to transport. When we're talking about transport, we're talking about rails, we're talking about shipping, kind of, and then you divide out parcel and trucking.
That's right.
Okay, just tell me why we divide them all out there. The rails are kind of an obvious thing, but why parcel and trucking? Aren't they kind of delivering the same stuff?
So they are delivering very different things. So parcel is delivering small packages under 150 pounds. There's also a niche called less-than-truckload, which I think is a very unique, interesting area. They deliver palletized freight, and that can be anywhere between 150 to 10,000 pounds. And then you have full truckload, which is delivering a full 53-foot trailer.
And less-than-truckload pallets is consumer stuff?
It's about roughly a third consumer and 2/3 industrial.
So mostly industrial.
Yeah.
Okay. So let's talk about this less than truckload and the advent of just, better distribution and how this all works.
Sure.
Less than truckload, you're saying we just need a piece of your truck, and is there better innovation in how they organize that? Like, what's been the catalyst for that to take off?
It's been a fairly steady market, and it really tracks industrial production, with 2/3 of the demand coming from manufacturing-related activity. But what we've seen is the market's consolidated, and there's very high barriers to entry. It's a business that requires a network of service terminals to be able to facilitate the movement of these goods, this palletized freight throughout the U.S.
So distribute like great big warehouses.
Exactly.
Okay.
We're moving pallets from one warehouse manufacturing center to another. And they can be from east to west coast, which may require a couple of touches through maybe 2 to 3 different terminals across that entire trip, which becomes a very difficult logistical exercise, becomes much more labor intensive, and like I said, requires a terminal network that is very difficult to replicate.
Do we have a lot of warehouses across the country that they can stop in at and restock and unload? And have we got tons of them?
We do, and they are growing as
growing.
they're trying to push fulfillment centers closer to the customer to be able to increase the transit time to customer.
Okay, and closer to the customer means closer to cities, basically, does it? Or
it can be city, or you can move into rural as well. We're seeing the growth into rural too.
That's really interesting. So why is there real pricing power there? Like, it sounds like it's a pretty good system. What is it that constrains it that demand allows the pricing to move, in your opinion?
I think a lot of it comes back to that terminal network, which I discussed there. We haven't seen capacity increase in this industry in over 15 years. And I think a lot of that is just because it is extremely difficult to get your hands on real estate that's close to the urban areas that they need to be able to service these customers with the transit times that the large national carriers do. And it's just been very challenging to be able to enter these markets because of that.
Interesting. And layer in the brokerage discussion here. So the brokers are the ones they're going to be putting this all together. They're their own companies. Are there lots of brokers? Are they publicly traded, or?
There's a few that are larger publicly traded, but it's a very fragmented industry. There's very low barriers to entry to this. This is mainly a human capital business and relationship-driven business. But the advent of brokers, I think, has really impacted this cycle where it's allowed a lot of the smaller independent carriers have access to volume that they likely would not have had in prior cycles that we've seen.
So what's that look like? So you've got maybe a smaller, family run, or just, a smaller company. How does the broker things for them? Like, what happens? Is that a technological sort of innovation there?
Yeah, I mean, we're definitely seeing the growth of digital brokerage. That has been a huge growth area over the last 6 or 7 years. And I think that has definitely reduced the barrier to entry again for these truckers to gain access to volume, like I was mentioning, that tends to dry up during these parts of the cycle. And I think that's allowed them to hang on and survive a little bit longer than what we would historically have seen.
And this is an area that you think could have continuing pricing power and maybe even rising pricing power?
I think on the less than truckload side, yes. I think in the truckload sector, there has not been a history of real pricing power, and I don't think that they necessarily will, just given the lower barriers to entry there.
Yeah, fascinating. So this is, when you're looking at these companies, this is within the United States. I'm sorry, maybe they come across the border to Canada, but you're looking at US companies doing this. It's a domestic story. What about more broadly within transport? I'm thinking of shipping. Is that something that you look at as well?
There's a very small niche area within shipping that I look at that's kind of inland tank barge shipping within the US along the Mississippi that moves a lot of chemicals and petroleum related products. But outside of that, I don't have much exposure.
Okay. And when you have, just back to trucking, tell us about the cycle they've been through. So there was that huge rush in the pandemic. We saw that we were all at home. We wanted our parcels yesterday, and the demand was very, very strong. Then there was a little bit of a letdown. Just how are you seeing this recovery? What type of trough was it? Was it a long trough?
Yeah, so this has been one of the longest durations and largest in magnitude downturns we've seen in the trucking industry dating back to the global financial crisis, which is pretty unique because typically this sector is highly correlated to the economy. And if you think through the last 2 years, the economy's been okay. Hasn't been great, but it's kind of been able to, grow slowly. And I think a lot of that has just been due to the increase in capacity that we've seen and the stickiness of that. And if we look back to last quarter's results, I think we're starting to see some green shoots that, we're starting to see the market move more towards balance, where any increase in demand will have a larger impact on rate, which will be really impactful for these companies' earnings. And so it does feel to me like we're getting some green shoots and maybe a little bit closer to the bottoming of the cycle.
Really interesting. And the demand is coming from?
Well, incrementally, demand has been more strong on the consumer side. Although I think generally if we were to step back, I think both consumer and industrial have been a little bit weaker than I think we would have expected at this point.
Right. Okay. But you see that the sort of clouds clearing there. That's part of the opportunity.
I think that is part of the opportunity. If we look out a couple of years, we are definitely closer to a trough in transportation.
Okay, fascinating. You mentioned earnings, so let's just go through that. We're all sort of in recent earnings mode. What did you see that you liked across both? We'll dig into aerospace in a second here too, but give us a sense of the earnings that you're watching closely.
Sure.
What did you like about them?
Yeah, I think within transportation, expectations were very low. Again, we've been in a very protracted down cycle. Broadly, I would say transportation earnings were kind of in line with fairly low expectations. Incrementally, there's still some debate around how the second half of the year and the first half of 25 shapes up with the consumer and the industrial economy. Both, some question marks on both sides. Within aerospace, I would say that generally results have been very strong, both on the aftermarket, which is the biggest profit pool driver of the aerospace supply chain, as well as the OEM kind of recovery that we're seeing in production rates.
So if you want to talk about delays, aerospace is a great place to go, isn't it? Because, they are actually flying older planes while they're waiting for newer planes. And the CapEx cycle, I think you can see the gumption, the money, everything is there, but it just takes forever. So give us an update. Like, are we going to see some new planes where doors don't fall off at some point? People don't like that.
Yeah, I understand that. So we've been in an undersupplied market for 5 years. And a lot of this, I think, really comes back to the hollowing out of the labor force in the lower tier 3, tier 4 supply chain. These smaller companies that are having struggling access to the labor pool, particularly kind of the talented welders and very specific niche labor pool that's required in the aerospace market.
And even the big players are feeling this.
And
right?
they are too. I think this is or has a ripple effect, and we're seeing that. And so we've been 4 or 5 years undersupplied in this market, and airlines are forced to fly planes longer than they probably would want to. And I think we're seeing, unfortunately, a consequence of that.
Yeah, and so. Just going back to sort of the cycle that they're in, do you find that, how much longer do you sort of see this being a tricky bit? Is it something to stay away from, or are there opportunities with it? I
still think there's opportunities. I do think that, you could argue we're pushing towards late cycle within aerospace, particularly on the aftermarket side. But the OEM, we're still roughly 20% below 2018 production levels. And, I think that the backlogs have 7 to 8 years visibility. So there's definitely demand there for OEM production rates to continue to grow. And on the aftermarket side, it's a secularly growing industry. I think that's what's one of the things that attracts us is you tend to see passenger growth has been 4 to 5% historically. We could debate whether that might be a little bit slower over the next decade, but I still think there's growth there, and that provides a really attractive opportunity.
Yeah, it's a secular trend, as you say. We were talking actually about this yesterday with totally different sectors discussion, but just the idea of leadership management change. There seems to be a lot of it out there across the boards. Do you see that as an interesting period? Like, is there a lot of stuff changing up right now? You would, as an analyst, you'd be watching management very closely.
Totally. It's something that I pay a lot of attention to and I spend a lot of time on. It tends to be a huge catalyst, can be a huge catalyst for stocks, and it's something that we monitor very closely. We do a lot of work on background checks, looking at past history. And yes, there has been a lot of change, and I think it does present opportunity. There's been several key notable changes that we've followed that are at pretty pivotal points in times for these companies. And I think can be a really strong catalyst. Yeah.
Payton, do you see the potential labor disputes at the Canadian rails having an impact? Could that just be a short-term impact? You're focusing on the U.S., but And rails are kind of the same in both countries.
Yeah, look, I mean, I think these are very important parts of the economy. I think a deal will ultimately get done, and it could have some near-term disruption, but that would be something that I think we would look to capitalize on as long-term investors if the opportunity presents.
Okay, fantastic. Can you speak to the debt load on trucking firms? Okay, take us inside that story.
Yeah, I mean, again, this is very nuanced, right?
Okay.
There are some companies that have very good balance sheets. There's others that are struggling. And, from a bottoms-up focused research shop, we are definitely going to be focusing on companies that, have very high financial flexibility, particularly at this point in the cycle. But there are companies that have actually gone under because these conditions have been some of the worst that we've seen. We haven't seen any large public companies, under that type of severe stress, but we're definitely hearing about it in the private markets.
And there is consolidation. I mean, that's sort of been happening for a little while. Do you see more of that?
Yeah, I think it naturally happens at these points in the cycle, particularly because you have weaker companies that may not have managed their financial position accordingly, and there's some really astute acquirers that will go out and try to capitalize on that.
Let's go to where AI fits in the story, because it fits in every story. Is it mostly in trucking, actually? At this point?
I would say so. It's very early, if any. But I'm hearing anecdotes, and particularly on the truckload brokerage side. That's where it's most people-oriented type business.
And truckload is you filled the whole truck.
That's right.
The customer's paying for it and shipping it off.
That's right.
And that's what's happening.
Yeah, and so this is particularly within the brokers that would be in the middle of the transaction between the shipper and the carrier. And what we're hearing about is just more of the digitalization of that process, from load generation to payment processing and carrier claims. And that was historically a very manual process. And we're hearing about potential AI use cases there, and the increase in labor productivity anecdotally has been very positive, but we haven't seen much of an impact on the P&Ls yet.
Yeah, it's just sort of early days on some of that stuff. What is interesting ultimately about the parcel side of things? I feel like this is something that we've been talking about long before the pandemic, the final mile. Is there any money to be made in that? Like, is it an area that you look at right now?
Well, definitely I look at it. I cover the two largest parcel carriers in the US. It's a very difficult industry. There's been a huge growth in capacity. It's a low barrier to entry business. And I think the increase in supply has started to now show with reduced pricing discipline and reduced pricing power with these guys. And I'm a bit concerned just about those barrier to entry issues, as well as the capacity growth that we've seen over the last 5 to 7 years. And I think it does pose a bit of a risk to the business models longer term.
So back to sort of the less than truckload. Let's dig into the customers, the consumers, the demand story there. What is it like in the US? It's a much bigger market, so there's going to be much more of this happening. But the pricing power, which is where I think you see the opportunity, just kind of take us into why they can charge so much per smaller piece that they're putting into the truckload. That's really the opportunity, right?
Yeah, it is. And I think a lot of it comes down to the fact that this is not a simple pick up at point A, drop off at point B type business, right?
It's more complex.
It requires a network that has a high level of fixed asset investment. It requires a lot more labor in touch points, which increases the cost. And these guys have been able to price for that. And I think a large part of that has just been the supply story, like I had mentioned, right? There has been no new capacity grown in this industry over the last 15 years.
Which means no new warehouses?
No, this means no new service terminals.
Service terminals.
So the service terminals that are servicing the growth in the warehouses is remained pretty much stagnant. And so as the volume continues to increase and the industry is consolidated, it's allowed for a greater pricing opportunity.
Do you see that as sort of the main story in terms of catching this on the way out of the trucking story? I mean, all of it seems to be coming out the other side. You've mentioned it's been one of the roughest troughing processes ever. Is this the leader that's coming out ahead of everything else? Are they all following? Or is it very idiosyncratic at this point?
It's idiosyncratic. Truckload tends to be the first to recover.
Yeah.
One of the things, again, that I like, we focus a lot on capital cycle theory and supply. And the supply story here, I think, is quite unique within transportation. Outside of the rails, I just don't think you're seeing a better supply story. And so I think they'll have really strong leverage to an upcycle. They may not be the first to recover, but I think they'll have very strong leverage through that cycle.
When you sort of take a look at, your style, it's probably the style of Fidelity. You've mentioned the bottoms-up research. You're going to be taking a look at companies that are going to travel through probably a downside capture better than others. Just talk a little bit about these two industries, ultimately what they represent and sort of where that fits in there. Because
I think they're very different in the way people think about investing in them. Aerospace, I would characterize as just being generally very high quality businesses, longer cycle, more predictability. And they have everything that we kind of look for: high returns on the tangible assets, high barriers to entry, really good pricing power, very durable moats. Trucking is more cyclical, lower quality businesses, but that also presents really interesting opportunities. And in trucking, I'm very focused on risk reward and downside, because I think that is the most important area that we need to be focused on for long-term.
What does the macro background mean? I mean, you said these are companies that are in pretty good shape balance sheet wise, but I mean, it never hurts to have interest rates come down a little bit.
No, definitely. I think, look, if we start to see a broader easing, that will definitely help the demand backdrop and ultimately help trucking stocks in general. And I think it will, by extension, also help aerospace as well, but more so on the transportation side.
With aerospace, are you looking at their international businesses? I mean, most of them are international businesses. So are they? Yeah. Are you looking at both? Whereas the transport is more landlocked.
Mainly U.S. domestic. Yeah. Aerospace is global. The aerospace aftermarket in particular is a very global business.
Is that the best area?
Aerospace aftermarket is it's the biggest profit pool of the entire supply chain for sure. They tend to have outsized margins and returns there. A lot of the products are spec'd into the new planes, and as being part of the regulatory process, once you're spec'd into a new plane, it's very difficult to change that part, and so they tend to have a very long aftermarket tail that they're able to capitalize on as a result of that.
What are the new planes going to look like? More fuel efficient, we know that, but what else?
Yeah, I think we're still years away from any real change in propulsion technology.
Okay, is that right? Because that gets discussed sometimes.
It does feel to me like that. I mean, obviously, it's a topic of discussion that we have quite often with the companies I cover.
Could you go to hydrogen, or would you?
And they're working on it.
They're discussing it.
They're working on it, but I think we're probably a decade or more away. We might have one more traditional jet fuel engine cycle before we get to that next generation propulsion technology.
Yeah, it's just that
incremental changes, but I don't think we're not really at that step function leap change yet.
And if they did get some of that going, would that be more a domestic story first before it would be bigger planes, for instance?
Yeah, I think it would be more of a developed world story for sure. Well, we would have to see though.
Yeah. What would you like to kind of leave with everyone today, just if you were to sum it up, these two sectors, particularly how they jive, but in fact they have their own cycles. The main opportunity is in what's troughed most recently?
Yeah, I think so. I mean, look, there's opportunity across my entire coverage. And sure. I think this is where Fidelity really shines from a bottoms-up perspective. We focus on where those best opportunities are. There's a lot of dispersion within industrials. So for a stock picker, it's a fantastic area. So I see a lot of opportunity across both. But I do think that transportation over the next several years will probably be the richest area.
Do we infer from that the customer's okay?
I think the consumer is okay. There's a little bit of debate around, where things go in the near term, but I do think that generally the U.S. consumer is in a decent position financially and from a household debt perspective. But on the margin, we have seen some incremental data points softening, and I think that's created a little bit of debate of how the second half of the year and first half of 25 shape up.
There's somewhat of a discussion of a different consumer in Canada for lots of reasons we all know. So do you see the U.S. transportation story as a stronger one because of the consumer?
I think you can make that argument.
Payton Liske, it's a delight to meet you. Thank you for joining us here on Fidelity Connects.
Thank you very much.
Thanks for listening to the Fidelity Connects podcast. If you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/how-to-buy for more information. While visiting fidelity.ca, you can also find information on future live webcasts. And don't forget to follow Fidelity Canada on Twitter and LinkedIn. Thanks again. See you next time. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada, ULC, or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments.